A new gold clearing system just launched in Hong Kong with major banks like JP Morgan signing on. My guest today, Eric Yeung, believes this could completely change the trajectory of the gold market towards physical settlement as opposed to paper promises, as is currently the case in the LBMA and other Western exchanges. How could this affect the gold price? We discuss that along with why India has had a massive influence on the drop in silver from all-time highs as they implemented major import restrictions on the metal. Eric believes ultimately that policy could reverse, and when it does, we could see a triple-digit silver price perhaps sooner than many believe. All of this and much more ahead. And guys, the Commodity Culture newsletter is live. It's free. Sign up at readplaza.com/commodityculture. Link is in the description. And now, Eric Yeung. Eric Yeung, great to have you back on Commodity Culture. I want to kick the conversation off today with silver markets. We've seen both silver and gold follow the same pattern since the war kicked off with Iran, falling when things get heated, rising when it looks like there might be peace. Now we're back at around $60 after dipping into the 50s. It looks like the war is back on in full force. We had a conversation off camera where you said maybe they're de-escalating, so perhaps you could get into that a little bit. But do you think this pattern will continue, or could it reverse at some point?
I think, Jesse, well, first of all, thank you for having me on your show again, Jesse. And second, I think, we're in a situation where we're bombarded with, different news on a daily basis, especially, the situation with Iran and Donald Trump. I mean, we were just speaking off camera on an hour to hour basis. Donald Trump comes out and says something different. And I guess depending on where you stand, fortunately or unfortunately, that affects all markets, including gold and silver. So I think we are standing right smack in the middle of crossroads right now, and the prices of gold and silver can really go either way. Depending on the global liquidity situation going forward.
That's an interesting observation. I know that you do believe, though, that silver is ultimately headed higher in the long term. You've been posting some memes on your X centered around Rambo and silver stacking. Maybe you could talk a little bit about that and why you think that regardless of this conflict going on, silver will ultimately be moving higher.
I think, Jesse, one of my observations, lately is that India has essentially, I would largely stopped or restricted the imports of purified silver into the country. This started um, as of the middle of May. So, the end leg of the U.S. Israel Iran conflict. Okay, and that's when we saw the silver price dropping from the mid 80s to high 50s. Okay, so that's what I think happened is essentially India was the marginal silver buyer. Okay, well they were a large importer, but they were the price mover essentially. Okay, so when they stopped or largely stopped the imports of purified silver in the middle of May, that demand was taken off the market. Therefore, the price of silver dropped to where, at the lowest mid high 50s, and now we're at low 60s. So, what I think might happen is, let's say, if India eventually reverses that because of the, when Indians can't get silver, they tend to smuggle gold. Okay, because to them, gold and silver are, their hedge to their own fiat currency, and also their flight to safety. Okay, so what I heard is during this period, the smuggling of gold really ramped up. Now, if the Indian government reverses that policy, let's say next month, and they start like allowing the import of silver again, we can potentially see the silver price go from the low 60s to the mid 80s again.
Let's talk about price for a moment because I've had a few guests on this show speculate on the silver price. Some of these numbers are pretty dramatic. Michael Oliver perhaps making the biggest call saying $300 to $500 silver this year. Peter Schiff came on the show. He said $200 silver. Matthew Peipenberg, $300 silver. Ed Steer says pick a number. Silver is going to go to a level that we can't even imagine once all of the paper manipulation is ultimately cleared out of the system. Do you have a range for for where the next all-time high will be for silver? And regardless, do you think we could get back to that triple-digit number this year?
So first of all, for the short immediate term, I already told you. I think silver may get back up to the 80s if India allows the import of purified silver again. Okay. In terms of whether or not we get back to, let's say, 120 by the end of the year, I think it really depends on gold, Jesse. So if gold, break out, let's say, of 450, 490, yeah, maybe silver will get back above 100. Now, in the medium term, I think, and I said this many times, I think the US government needs the price of silver to be a bit higher. Okay? Because right now, as of right now, 70% of all global um, silver refining is done in China. Because why? Because the silver price was super cheap. So only the Chinese, with their efficient, manufacturing, refinement, smelting, and of course, like they can do cheaply, could have took on that job. Now, if silver lingers below around 50 or below, then nothing will change. The entire silver refinement supply chain will remain in China. That's not what the U.S. government wants. I mean, if you saw the news, Jesse, the U.S. government, the Pentagon, and Korean Sink is setting up and also J.P. Morgan, they are setting up a new smelter, critical mineral, also silver smelter in Tennessee. So I think they're serious. And on top of that, by the way, in September, sorry, not in September, in July, later this month, the US government is supposedly going to set minimum prices for critical minerals, including silver, because of the reasons I just told you. Like they don't want stuff to be super cheap, such that their domestic smelters and refiners cannot afford to do the job for them, right? They want to reshore the stuff. So based on all that, everything I just said, I think if gold, like I said, breaks off range, I think silver is the potential of breaking off 100 and revisiting 120. Now, in terms of whether or not like silver will get to 300, 500, like the other experts are saying, I don't know. I don't think anybody knows. I mean, like they have their models and they have their reasons. But from my perspective, I think we can discuss that once we get back above 100 and stay up there and retest 120.
The sponsor of today's episode is ARC Silver Gold Osmium. Owner Ian Everard is praised even by his competitors as one of the most honest and level-headed bullion dealers in the United States. They have some great prices. You can see some of them displayed right now on screen. Take advantage of these specials today by reaching out to Ian at 307-264-9441 or by email at ian@arcsgo.com. Make sure to tell him, of course, that Commodity Culture sent you. And now, back to the interview. Some great thoughts. I want to talk about gold in just a moment and some big news coming out of Hong Kong, which I'd love to get your analysis on. But first, I just want to touch on the gold and silver miners here because they continue to look undervalued, obviously following similar pattern to the metals themselves in terms of price action recently, but they've basically barely outperformed the metal for quite a long time now. Um, all while the big producers are reporting these record earnings, we're seeing their share prices actually fall in response. Do you think there will be a paradigm shift here at some point? And is this a buying opportunity in your view?
Well, first of all, I think the miners, the institutions that are investing in miners, or even individuals, um, if you look at the miners' prices, they're pricing in a lower gold and silver price. And the predominant narrative out there is that the tech bubble or the AI bubble is about to pop, or like the reverse carry trade in Japan is about to fall apart because the Japanese yen has been performing very poorly. That is happening right now. I mean, like, is it going to pop? Is the Japanese reverse carry trade unwinding going to implode the market? We don't know, but I think a lot of players are investing or not investing in precious metals based on that because they are anticipating an implosion of everything, of all prices, including gold and silver miners. I don't blame them. I mean, look at what happened back in March 2020. I remember that GDXJ went like on the intraday. Okay, I got to be careful here. Intraday, GDXJ, which is the ETF for junior gold miners, went down to 1250 in intraday. I couldn't believe my eyes when I saw that. Okay, so that was like, frankly, below the net asset value of all those junior miners. I mean, it can happen if there's an acute US dollar liquidity squeeze. So I think there's the fear out there that that might happen, and therefore, a lot of people they're already selling their miners across the board. Now, in terms of whether or not it's a buying opportunity, I mean, if you're already out of it and you want to get back in, might not be a good bad idea to start positioning. I'm not saying going all in. Okay, I myself, I'm not buying because I'm already bought a lot at the bottom during 2023 and 2024. So the average price that I bought my miners at is still significantly lower than where we are right now. So I myself, I'm not buying, but yeah, like I said, it might be a good time to start positioning if you do not own any miners.
Do you think this is also a time to potentially maybe keep some extra cash on the sidelines in case of this AI bubble bursting, as you mentioned? Because obviously, if we do see a big sell off in the miners, that could certainly be a buying opportunity. And across the commodities complex, across the stock market in general, if we see the three big indices plummet or take a big hit, then ultimately we're going to see the high quality names get sold. The baby's going to get thrown out with the bathwater, so to speak. So do you think now is a time to maybe have a little bit of extra dry powder on the sidelines?
Absolutely. I tell people to keep cash all the time. I know there are a lot of people in the sector who are really aggressive and they say they save all the money in silver and gold. I mean, I get that, especially gold. I get it with gold because gold's physical gold's volatility, price volatility, is not as high as silver or even miners or even equities, right? But I always tell people to keep cash on the side. I'm doing that myself. So, so I have a whole bunch of cash. People tell me, why don't you buy this? Why don't you buy that? And I say, that's the power of cash that I do not touch. So that, as you said, Jesse, if the March 2020 situation arises, then I have some dry powder that I can deploy.
Yeah, absolutely. I feel the exact same way about that. I want to switch to big news coming out of Hong Kong. They've launched a new gold clearing system with at least 6 major banks signing on, including JP Morgan, Deutsche Bank, and others. What are your overall thoughts on this? How could this change the gold market in your view, both in China and worldwide?
So, Jesse, that's a big deal because it's not the first time that mainland China, the Chinese government, has tried to attract foreign capital into the gold markets. There's a entity, I don't know if you're aware of it, called the Shanghai Gold Exchange International. Now, that's different from the Shanghai Gold Exchange that everybody is familiar with. That, like, the Shanghai Gold Exchange is domestic within mainland China. That's for like its own institutions and its own retail customers within China, but not for foreigners. Okay, like theoretically, unless you are a foreigner who sets up a company within China. So that's something else, though, right? Um, so this Shanghai Gold Exchange International, though, was supposed to attract foreign capital at the Shanghai Free Trade Zone. So that's the FTZ. Now, unfortunately, with the Shanghai Gold Exchange International, you're still under the mainland Chinese laws and also the mainland Chinese capital controls. So for the last 10 years, basically SGEI, Shanghai Gold Exchange International, has like almost zero volume. Okay. It's low volume. Um, the Chinese government never really attempted to inject liquidity into it. So what is happening in Hong Kong now, I think, is a more serious attempt by the mainland Chinese government to set up something in Hong Kong so that it can attract foreign capital in a gold market that is directly linked with the mainland Chinese gold market. Okay, the way it works is you have this entity called HKPMCC. That's the central clearing in Hong Kong for all these what we call over-the-counter OTC gold contracts that international institutions and governments, CBs, and also Chinese players, institutions at this stage, okay, can participate in Hong Kong. Now, Hong Kong also already has something called the, uh, Hong Kong southbound stock and also the Hong Kong southbound bonds, which is basically a mechanism that allows Chinese citizens and authorized entities to buy what we call offshore stocks and bonds if they are located in China. Okay, normally, like I said, under the strict capital control rules in China, those people cannot buy these securities. Okay, but through these southbound channels, they can do that. Now, my suspicion is that after the first phase of this, new Hong Kong hub launch, I think what the mainland Chinese government is going to do is that they're going to establish something as in gold southbound channels, okay? So that mainland Chinese citizens, the authorized ones, and entities can buy physical gold via OTC in Hong Kong and to be cleared by HKPMCC.
So what would that mean overall then? Because, and maybe you could walk us through how that system works a little bit. I know you had posted on X about this. walk us through in a little more detail how this system works and how this could also potentially influence the gold market as well?
Okay, so right now, all like because it's right now it's set up for institutions only. So they haven't really announced or they don't even have a website actually, like to explain exactly what they're doing to consumers or like individuals, right? So, but like from what they've told us, we know that number one, the this OTC gold market that is cleared by HK PMCC, okay? We know that number one, they are dealing with unallocated gold contracts, just like the LBMA. Okay, number two, we know that they're going to set up a big forwards market. Because as you know, Jesse, if you don't have like a forwards market, like for OTC, you don't have a market. You cannot hedge. You cannot sell ahead, right? Like there's a physical need for that. So we know these two things. And number three, they have said that they're going to encourage mainland Chinese liquidity into this OTC market. So like I said, I don't see how they can do that without some kind of southbound gold channel, which I think is imminently going to happen. So basically, what you have, I'm just going to put it in layman's terms, is that unlike the SGEI, the mainland Chinese, they're going to flood this Hong Kong new gold hub with mainland China liquidity. Because if you don't have liquidity, just like the SGEI, you don't have markets. You don't have anybody coming in. You need liquidity. You need unallocated gold contracts so that like the volume goes up. And then, when your foreign players come in, they can easily access the market, okay? Because the market already has the liquidity and the volume in terms of trading. So that's what I see.
And do you think this new system will ultimately lessen the speculative paper trading side of the gold market and allow for more of a focus on actual physical settlement of the metal? And if so, could this completely change the game globally in terms of how gold is priced?
So, like I said, it's unallocated gold contracts. But let's put it this way. Um, Even at the SGE, like their contracts are unallocated. But if you look at the numbers, their gold trade is backed 70%. 70% of the gold contracts at the SGE around, right, are actually physically withdrawn. So I expect something to be similar in Hong Kong. Like if not 70%, maybe 60, maybe like worst case scenario 50. Nothing like the LBMA, where you have like 99 to 1, 99 paper to 1 physical. So I think, and this is speculative. Okay, people are going to yell at me and say, hey, we think it's going to be like the LBMA, 1 to 99. But like, we don't know what it is going to be until they actually have done many months of trading. And we get some numbers from official sources. But like I said, my suspicion is 50 to 70% physical backing. So to answer your question, if the new Hong Kong Gold Hub, like the OTC physical market, is 50 to 70% physical backing, yeah, I think a lot more transactions are going to come through here. Because if you go to the LBMA or COMEX, you're looking at substantially less physical backing of gold trade.
Let's talk about China's CIPS payment system. This is something that we don't see much attention paid to, obviously, in the mainstream Western press. For those who don't know, it's an RMB-centric cross-border payment system launched in 2015 that many believe could become a competitor to the SWIFT system, which is kind of the dominant international system controlled by the West. What is the current status of CHIPS right now? How many countries are participating? And do you think that ultimately it could overtake SWIFT as a preferred system, despite the fact that it uses the yuan as its main currency?
So that's a very good question, Jesse. It really ties in with what we just talked about, and I'll explain that. Number one is I'm just going to give you some numbers. The daily average volume of I'm just going to pick a month, February 2026, was for chips was 619 billion RMB. That was the daily average volume. And then in March, when the Iran war started, okay, it jumped to 920 billion RMB, like RMB yen. So to give you, you know, a understanding of what we're looking at here, or our Western audience, because they might have difficulty, in the head, like visualizing RMB yen. At 619 billion RMB, that's approximately 100 billion US dollars. And then at 920, that's approximately 130 billion US dollars. So that's actually pretty significant. It's like it's almost a 50% increase ever since the Iran war started. It's climbing. Now, the reasons are obvious, Jesse, because you have the US and Israel fighting Iran for all these months. Countries in the region and also countries around the world are trying to find alternatives to the US dollar trade, right? Because you have that huge disruption at the Gulf. So naturally, they're shifting some of their trade to RMB. That's why you see that 50% jump. Now, why do I say all this ties in well with what we just talked about? Because if you're a foreign entity and you're trading using RMB yen, you're not going to be parking your excess RMB yen surplus into US Treasury bonds. Okay, like that's the US dollar ecosystem. So if you're making US dollars, you have access US dollars, you park it in T bills, you park it in US Treasury bonds, right? As collateral, etc. But if you are in the RMB trade, what are you going to do? You're either going to buy RMB denominated bonds, sovereign bonds, which, by the way, China is pushing. Like I said, there's that southbound bond link, okay, in Hong Kong. So that's happening. But on top of that, you might want to park your money in physical gold as a reserve asset and collateral, because you don't, unfortunately, the RMB is not fully freely traded. You have like the onshore and offshore RMB system. Is a basically a two like separate rail system. Okay, so you have the onshore RMB, which is heavily capital controlled, and then you have the offshore RMB, which is freely traded, quotation marks. So, like I said, some entities may choose to park their excess RMB in the physical gold. So this really ties in well with what the Chinese government is doing in Hong Kong. Because, let's say you're an entity, you sold whatever, coal, oil, energy to China, you're holding RMB, you go to Hong Kong, and then you what? You take your RMB yen and you park it at the Hong Kong, Go Hub, okay? Buy a warrant, okay? That's basically a ticket to withdraw the gold from the OTC market. And, you would transact, like buy or sell that gold in Hong Kong. So all this ties in together.
That's really fascinating and so many developments to watch up ahead. Now, keeping in mind everything we've just discussed, Give us your current thoughts on how China, both Hong Kong and the mainland, are going to play a role up ahead in both precious metals markets and the global financial system. What do you see coming for the rest of 2026 and beyond as we look out further in a world that seems to be becoming more and more divided geopolitically?
I think China is going to continue beefing up this, Hong Kong Go Hub to offer its trading partners at the BRICS and Global South an alternative to the US dollar and US Treasury bonds. So it's an ongoing process. It's not, I know some YouTube personalities like to point out that the US dollar and the US Treasury bonds are still dominant. Yes, I agree with that. It's a process. So to your question, I think this process is going to be ongoing, and China is not all talk. They get their hands dirty. They get things done. So I think it's going to be a ongoing process for the rest of 2026 and forwards.
And before we close things out, is there anything we haven't yet discussed that you think it's important that people are focused on? Anything you want to emphasize? Just anything additional that's on your mind when it comes to precious metals markets, the global economy, or anything else?
I think if your audience or some of your audience, if they don't own gold and silver, it's never too late to start. Just dollar cost average. That would be my suggestion, is to dollar cost average, so that you're not, nobody can time the market. If they dollar cost average, then in the long run, they probably get a average good price into the market.
Absolutely. And building that generational wealth. I mean, you've got to look at stacking physical precious metals as a store of wealth. I think for myself, that's how I think about it first and foremost. And you want to start building that. I think dollar cost averaging is a great way to do it. Eric, where can people follow your work online?
Jesse, people can follow me at King Kong 9888 on X.
Great. I'm going to put that in the description below. You post very regularly. You put out a lot of great information, so I highly recommend people follow you. Eric, once again, thank you so much for coming on the show.
Thank you, Jesse.
Thank you for joining us today. This episode is brought to you by ARC, Silver, Gold, Osmium. They have some great prices on precious metals, bullion products. You can see some of them on your screen right now. These are subject to change, and while supplies last, reach out to owner Ian Everard today at 307-264-9441 or by email at ian@arcsgo.com, and make sure to sign up for the free Commodity Culture newsletter. We go over all of the key points my guests talk about and the actionable investment insights that I've come up with based on that. It's extremely informative, totally free. readplaza.com/commodity culture. Link is in the description, and I'll see you guys in the next episode. Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.